Taking a look at the interest rate markets today, I want to focus once again on the 10-year note. Another volatile session in the 10-year today. We saw quite a range. We saw it settle right at the 123.31 level, a high of 124.08 half, a low of 123.23 half. So near the top end of the range today. Once again, we continue to see volatility in the markets persisting, particularly in the equity markets, and we're also seeing volatility in the commodity space. So therefore, we continue to see it spill over into the 10-year note and the bond market in general, and we're seeing quite a reaction here in the middle of the curve today, where we saw the 5s, the 7s, and the 10s really the big movers of the day. The real story here continues to be, and it has been this week and continues into tomorrow at least, and possibly into next week, this U.S.-China trade negotiations. We're seeing news breaking on a regular basis, dictating what the possible impact and outcome could be for those negotiations, and we're seeing that play out in the equity markets, increasing volatility there, certainly increasing volatility in the bond markets. As you see money flowing out of the equity markets and into the bond markets here, for at least for the perception as a safe haven type of play, as we continue to see uncertainty surrounding this U.S.-China trade relations. Also, I want to point out another factor here that I think it's interesting is that we had some data points come out. We had PPI come out this morning, a little weaker than what was expected, and so we saw that play into the 10-year pricing this morning along with the U.S.-China negotiations. We also have CPI coming out tomorrow, so another inflation number. The Fed's going to be focused on that, and certainly has had an impact, I believe, on the pricing of the bond market. Central banks, another focus here. We saw overnight the Bank of New Zealand, Royal Bank of New Zealand, cut rates. First developed market this year to cut rates. Now, we've seen the markets kind of anticipating the possibility of that happening, so it is going to be interesting to see if this is a harbinger for things to come. We're going to possibly maybe see that move across the globe, possibly in the Europe. Certainly when you look at the CME Fed Watch tool, better than 57% chance of a cut by the end of the year, at least being priced in to that CME Fed Watch tool. So certainly something to keep an eye on as we continue to move through some of this recent volatility and disruptions in the equity markets. Also, I want to point out that so the driving forces here is the Fed is going to be focused, as I pointed out, on the CPI and PPI numbers. And if we do see an escalation in these trade wars, which the market is cautiously predicting that there could be further initiations of tariffs, that would certainly impact the prospects of global growth, and you would expect that that's going to play into the bond market, particularly when you look at the 10-year, and that's why I believe we're seeing the 10-year having a nice rally here, given the fact that we're seeing equities coming off of their highs and continue to realize some selling pressure.